Hi, today I would like to look at Folks. It's a company from Poland. It's a software technological company, but today I will not be talking about the operational activity, but we'll look at the financials of the company. I used Guru Focus and prepared some of the most important metrics, ratios, etc. to look at, and maybe later we'll look at Business Radar, which is also a great place for analyzing Polish stock market companies. So as we can see here, currently the price is at around 180 Polish zloty with the PE ratio of 24, but this PE ratio currently is probably lower than what it should be. I mean, because this company has a lot of investments in the last year, it's a huge amount, so that for sure decrease the net income, because if we look at things like operational income, etc., those numbers are going strong, while in the last quarters there is a drop in net earnings, and that's because of the big investments, and this is going to further increase the growth of the company in the future, of course, if this money is invested in a good way. But something very specific about this company is that the growth of revenue is massive. It's around 40% in the past 5 years, every year, 40% every year over the period of past 5 years. Sadly, if we look at the chart here, you can see that the price also increased a lot after 2023. It's 455% in a period of 1,100 days. So in nearly 4 years, it increased around 450%. So that's massive. And yet still, if you look at the beta of the company, the beta is low. All right, so in here you can see the growth rates. Especially important is the growth of revenues. I'll grab a pen. Right, so the revenues, they're amazing. And also the book value per share is also increasing. Sadly, this is bad, but the price increases accordingly to the growth of revenues and book value. So sadly, there isn't a big negative correlation that would indicate a potential undervaluation, especially with the 60% increase in price in the period of last year. In here on the chart, we can see the revenues, they are steadily growing. The same goes with the earnings per share. This chart and this chart, they are a little bit correlated with what we see on the price action. The operating cash flow, this is very important. So from the main segment of the business, it is also growing rapidly. In 2020, it was around 3. Right now, after 5 years, it nearly tripled. And this company is paying dividend. It started doing that in 2020, but the yield on the dividend is around 1.5%, so it's really insignificant compared to other Polish companies that tend to pay much higher dividends. The book value, yeah, in here I marked the trend line. It's growing by 40% each year, which suggests that this company has a way of generating profits or gaining capital that they can reinvest further into the business. The shares outstanding over the period of the last 8 years, shares outstanding is pretty stable, so this company is neither buying back or issuing new shares. And with no dividend, that indicates that this company is investing all of its money to further grow its business. As you can see, the revenue per share is stably growing from 21 in 2021 to 46 in 24. The earnings per share, this ratio compared to the revenue isn't amazing, but we'll look at the profitability ratios later. Oh, and also the cash per share, there is some cash per share, but it's around 5-6% of the actual current stock price. Right, and now the margins, profitability ratios, return on assets, this is really massive. In here, yeah, sadly I have data that's a little bit older from 2024. In here the ratio went up all the way to 42% return on equity. And this is not because of heavier debt than usual, but because of the underlying business just generating more profits. As we can see, the ROA also doubled year to year. The gross margin, this is very important. Warren Buffett always wants to see this indicator as high as possible. With the current 90%, this is just a crazy number. 22% from the operating margin. Well, that's a little bit lower. But well, what happens? And also, if we compare that to assets, it's at 0.254. So around a quarter of this company's assets are funded by debt, which is alright. This company can operate with a significant debt position because of the high margins, net margin of around 17%, 11%, 6 and 8%. Well, they are not super stable, but they are high enough to support a lot of debt and interest payments. Right, in this slide, I cannot see anything very interesting. The capex to revenue is quite low, just 4%. Capex to operating income of 20% is not great. In here, let's look at the income statement, and we can see that a lot of the revenues go straight into the gross profit. The costs of goods sold are very low, and the gross margin because of that is around 90%. But look, if we look into the other operating expense, well, basically all of the operating expenses, at least on Group Focus, are accounted for as other, which is very weird. But in reality, that gross margin goes down a lot, down to 21% on the operating margin. And yeah, the net margin is also lower. For that year, it was 17%. The interest expense grew, so they took on more debt. Or maybe the debt became more expensive, but it's nothing significant. Yeah, the net margin with 17% is not great, and we can see in 2024 the earnings per share grew rapidly, very significantly, but we'll look at the cash flows later to determine why did that happen. The balance sheet is healthy, but there is a lot of goodwill, I think. Yeah. So 500 of goodwill, 621 of intangible assets, and yeah, it might be because of how Guru Focus takes the Polish financial reports and present it. So if we read into the financial statements of the company, it might be much more clearer what exactly is in the balance sheet of that company. But in here, yeah, total current asset of 240 and goodwill of 500, that doesn't look very good. The 142 is in cash, but we know that it's only around 5%, 6% of the current market capitalization, of the current valuation on the stock market. Plant and equipment, machinery, all of those numbers, if you add them up, it's around 200. So the goodwill is just a significant part of the balance sheet, which is okay because this is a software company. But still, why is it under the goodwill? This is very, very weird, and it's, well, you need to be very careful when valuing the real value under the goodwill. So as we see, total assets is 942 and 500 of that is goodwill. This is just terrible. This is terrible, really. But of course, that also depends how highly this currently investors value this company. We'll look at the valuation ratios soon. Current liabilities, there's some long-term debt. This is okay, nothing crazy. Short-term debt is low. We'll look at the liquidity ratios soon. This metric, retained earnings, is also very important, that this company is investing its earnings back into the business. And yeah, let's look at the cash flow statement. So in here, what I want to see is low depreciation, amortization, etc. We can see that, so this is very good. Further, we can see growth. In here, it's around 50%, 100% actually growth. In here, it's also 100% growth. So on one hand, this is very good, but we need to know if this company is going to grow into the future, because if not, the standard models that will be used in banking and finance to evaluate this company will take the growth in the last 4 years, and it will extrapolate that onto the further years, which can lead to overvaluation because this company is just showing a huge growth in last years. Now, investing activity, as you can see in 2023, 2024, that investment activity was very small. Before that, it was huge, and we will look at on business rather soon to see the last quarter and how the investment looks like, because it's very big, again, around, I think, 500. And cash flow from financing, well, net issuance of debt is minus 50 last in 2024, 2023. So they're paying back their debt, and yeah, payment of debt. In the last year, they didn't take on much more debt. And here we can see that the beginning cash position in 2024 was around 70. The change in cash, it was positive in 2023 and 24, but nothing. Well, the increase in cash is significant, but compared to the valuation, it's not great. And yeah, let's look at the valuation ratios. So as you can see, the price to book ratio is around 6.5, even with the 40% increase every year over the last 5 years of the book value. Is still quite high. The PE ratio of 20, this can seem like a low number, but remember that this is a Polish market, and usually some of the companies can have much lower valuations than what we are used to, for instance, while investing in the USA. Price to sales is also not that high, but yeah, that price to book value ratio doesn't look good, especially accounting for the weird high goodwill in the books. And yeah, the market cap, as you can see, from 23 to 2024 increased around 100%, another 100% increase from 2022 to 2023. So that price action doesn't look great for a long-term buy. But of course, if we can expect the future growth to continue, then it can be all right. The current ratio, quick ratio and cash ratio, they're all alright, so there is no liquidity problems. There's no share buyback. All of those numbers below 1, this is not important at all. Well, previously they were doing some more over the last before 3 years. They were doing more buybacks, etc. But now nothing significant. And yeah, as you can see, the beta of the stock is quite low. Usually sits around 0.5. The year 2024 at 0.23. And here you can see the Guru Focus ranking. The profitability is at 8, so that's quite nice. Financial strength at 6, and of course the super big growth, but sadly the momentum is also at 10, and momentum is how fast the price is going up. So it's company is growing fast, but the price is catching up. In here we have some business segments, so a lot comes from the company Vercom, some from Cyber Folks, and if you look at the geography, it's most of its revenues come from Poland. Okay, so that's it. Let's look at the business rather, because in here we have a little bit of newer information, especially on the cash flow statement. As you can see in here, this is the 4th quarter of 2025, I think. Oh no, those are last 4 quarters. So that would be quarter 3, 2 and 1 2025 and quarter 4 of 2024. And we can see that the expenses that are going toward investments are just massive, which can decrease the net earnings, but in reality will increase them long term. And we can also see a huge spike here on the financials, cash flows from financing, and this will be probably, oh, they're actually issuing new stocks, which is another sign that the management might think that currently the prices of the stocks are high enough for them to issue more and sell them. So this is not a good sign for an investment. I think that's all I wanted to look at right now. Maybe we can look at the, if we compare the valuation, currently we sit at 48 is the price to earnings ratio, but it's because of a high increase in the investments of the company. On the other hand, sadly we can see that they are financing it partially from issuing new stocks and probably through debt. Right, and let's look at that goodwill. Let's see how it looks here on the business radar on the Polish website. Yeah, we can see in the last quarter debt skyrocketed a lot. It should be here somewhere. Yeah, out of the tangible assets, there's around 1,300,000,000 plan in the book value, and a lot of it is intangibles. So this can be very difficult to analyze then, and the wartość firmy, which is I think the good value here, is sadly hidden. I need premium to see it, but as we know from the Guru Focus, this number, that goodwill, is super high. at least 0.5% of the intangible assets, which is alright because they probably they create some program or whatever, and they then put it onto the book for the price it cost them to create, but of course they are going to benefit from it, so the real value of that program is higher than what they paid to create it. But still, there is a lot of goodwill that it can be very, very difficult to say if this is worth anything in reality. Right. Yeah, I just wanted to look at like basic financials of the company, to look at the most important things. If I had to say, if I see some undervaluation here, I would say no. But what is very interesting is that gross margin of 90%. This is something that needs to be studied more, and also the amazing growth of this company. If this can be seen into the next 5 or 10 years, which is unlikely, then this company can be a great opportunity. But of course, it's not always about making the right investment. Sometimes it's about analyzing a certain company. So in this case, there is certainly a lot of interesting stuff going on that, well, we'll need to look further into.